Well, hello and welcome to Thank God It's Friday. Today we're being joined by Neelkanth Mishra, the head of Equity Strategy India at Credit Suisse. Well, thank you so much for your time, Neelkanth.
Pleasure being here.
I'm going to start by quoting what you've written in your Outlook 2017 report, and it says the momentous changes of 2016, both local and global, have not played out fully yet, and there continues to be significant policy risks and uncertainty.
Right.
So on the back of that view and opinion, where are you placing your investment bets?
So I think the uncertainty in India is actually is far greater than for Indian sectors that are exposed globally. So there is a lot of global uncertainty. In fact, if you ask some of the global investors, they think that the policy risk coming out of Trump and Brexit and what could happen in China is actually much bigger than what you guys are seeing here in terms of medium-term outlook. But I think that as an investor, I would rather be in sectors which are not focused on India. Mm-hmm. So we had cut Indian IT to a deep underweight in September. We've upgraded it back. I do think that it can actually do well. It's been badly derated. We've been very positive on metals, and we continue to be positive on metals. Within India, we would rather be in beneficiaries of lower, cheaper interest rates. So we like some construction names. We also think that housing finance companies can be beneficiaries.
We were just talking about how you've increased your allocations to IT. I want to understand what is your view on pharma names also in the backdrop of Donald Trump taking office soon. And I also saw that your 2017 topics include HCL Technologies and Tech Mahindra. So is it just a purely valuation call that you've taken as far as these IT stocks are concerned?
So let's start with pharma. I think on pharma, the concerns are manifold. See, one, a lot of the froth that had developed in the market, in the sector in terms of price earning multiples over the last 2 years has corrected. But I think that there are still some structural issues, like there is still a lot of consolidation happening on their customers. So pharmacy benefit managers, insurance companies, pharmacies. There is a lot of fragmentation happening on the supply side. So after a long time, and when I used to be a pharma analyst 6-7 years back, there was a big backlog of ANDAs at the FDA because they lacked capacity. So now they've expanded capacity and the pace of approvals is picking up, which means that there will be more competition for existing drugs, which means that there could be more pricing pressure. The fact that the Trump administration is openly going after pricing for branded drugs, I mean, they're not really talking about generic drugs, but if branded drugs prices fall, then actually for the customers it gives them more incentive to go and cut generic drug prices as well. So that is still to play out, and I think you have to be very selective in pharma if you are trying to invest. On IT as a whole, I mean, see, the stock picks within a sector is generally the analyst call. I mean, they know fundamentally because they know the stocks much better than I can ever hope to do. And I do think that some of these stocks are very badly derated. Okay. And I think a global cyclical recovery, I mean, the growth in 2017, global growth at least, is expected to be the highest since 2011. Whether it plays out or not, we will see. But at least in terms of expectations, that's a reasonable sign that 6 months, 7 months down the line, you could see IT earnings starting to get upgraded, right? And there is a risk of H-1B visa and import tax and all of that. But with these kind of P multiples, it's worth taking the risk.
Right. Okay. So we are looking at the union budget. Last year, the government had said that they are expecting about nearly 12% growth in their gross tax revenues. So far, from April till December, we have seen about a 22% growth. Obviously, we are going to see a lot more coming in for the final quarter as well. In that case, what does this mean for the union budget? Where do you think allocations will come in, and what would be a good union budget for you?
Okay, the last question is a very tough one, but we'll come to that. Let's discuss the revenue growth numbers. I think the issue this year, even when the budget came out, and I'm sort of patting my own back here, but we did say that the revenue numbers on the tax side were underestimated. There was a lot of criticism for the government on the non-tax revenues, that they were overestimating those revenues, and that's played out exactly like that. So as of now, we are running a shortfall of about 60,000 crores, 600 billion rupees on the non-tax side. If the tax revenues keep growing at 18% for the full year, we are talking about a 60,000 crore extra. So we are more or less there.
Right.
So can tax revenues keep growing at this pace? If you see some of the subcomponents, service tax revenue was up 44% in November.
Right.
It was growing at 16-19% in the previous 3 months. So I can imagine that the formal economy didn't slow down in November, but did it really accelerate to the extent that 19% became 44%?
Right.
So there are various distortions that have emerged in the economy because of the demonetization exercise. So therefore, I wouldn't extrapolate that as a trend growth number for going forward. So I think this year's number should be okay. The challenge for the next year is, and there are multiple challenges actually, it's a very complex budget. There is going to be no plan, non-plan. The railway budget is to be included.
Right, absolutely.
There is likely a mid-year start of GST. So how are you going to present it? Are you going to assume excise and service tax for the full year, or you're going to put a 1st July estimate? Do you know if it's 1st July? If you want to put GST, do you know the rates for which each of the products?
Right.
There is no idea, right? There is also likely to be some simplification in the exemptions list. So as the FM had mentioned a couple of budgets back, the headline tax rate is 30%, but the challenge is that the overall tax paid is 23%. So you reduce exemptions and bring down the headline tax rate. So some of those things I think are likely to happen. I think the market focus will be on two things. And the first, on what the headline fiscal deficit is, which, given past experience and how the market responded, I don't think the government will take too many liberties with it. There is an FRBM review committee report which, as per newspaper reports, is going to be presented on Monday. It won't be made public before it's presented to the Parliament, so we'll not get to know. But point is that they may give some suggestions which are to be incorporated in the budget, and therefore we could see some tweaks. But in general, it should be the deficit target could be between 3.5 and 3. It can't be less than 3 because that is a target. It can't be more than 3.5 because that the market may not like. But the government has in the past relied a lot on extra budgetary resources. So when you're talking specific expenditure for national highways, railways, or as in the Pradhan Mantri Awas Yojana, they've announced this loan from NABARD. So they could use a lot more of extra budgetary resources wherever they have to give a stimulus.
Right.
So that's one on the fiscal deficit. The second big thing for the market would be the revenue growth assumptions that the government makes, because there is this belief in the government that there should be a lot of tax buoyancy because of demonetization and the expectation of GST.
Right.
Now, do they go overboard with that? Some people that I've talked to among the analyst community think that those things will happen, but with a lag. Right? I think that's the whole design intent of demonetization GST, that you improve tax buoyancy or tax compliance. But should that happen in the first year, in the first month? I think that's a bit tough to digest. So anyways, those are two things that I think will matter the most for the market. I think there is a lot of expectation of stimulus, demand stimulus from the government in the budget. My sense is that this whole process that we have gone through in the last year or so, well, not just the last 3 months, I think there is a limit on the government's capacity to spend. We all assume that give them more money and things will happen.
Yes.
What we have seen on the road side, for example, is that all the 70,000 crores that NHAI had to borrow in terms of tax-free bonds, not a single rupee has been issued.
Right.
So the fact that more roads are not getting built is not because of lack of money. The fact that the railways capex is not expanding is not because of lack of money.
Okay. Yeah.
So there is a certain limit to which the government can stimulate the economy, and that I think will be the critical factor as to matching what the government can do, because the government is aware of this clearly, and what the market expects.
So where are these challenges coming in from in that case? It can't just be execution.
It is execution, right? Okay. The railways, it seems, is struggling to scope out projects which are bigger than 150-200 crores.
Right.
Right. Most of the projects that they do are 5-10 crores. Now, you can move from 50,000 to 100,000 crores of annual capex with that kind of number, but you have to double that number of projects. You have to move from 1 lakh crores to 2 lakh crores.
Right. Right.
Now, you have to move to larger projects, because with the same number of people, you have to execute larger number of projects. You need to be able to outsource.
Right.
If you can't scope out more than 150, 200 crore projects, then how are you going to outsource? So beginning of the year, financial year, they expected to order at least 4-5 projects of 400 to 500 crores. Middle of the year, they said, well, maybe that's too ambitious. Let's do 5-6 projects of 250 crores. That's turning out to be very difficult.
Right.
So see, over time it will happen. See, there are lots of very structural changes being brought about in the bureaucracy, in the railways, and over the next couple of years, you will see things change.
Right.
But these are challenges which you cannot recover from very quickly. I mean, there is a limit to how much land you can acquire. I mean, if you can construct, or if you want to order 25,000 kilometers of projects, you have to acquire 2.5 times the amount of land.
Right.
Where are the people for that, right? So in terms of process maturity, in terms of availability of systems, like we discussed on the generics, right? The FDA was designed to approve a certain number of ANDAs.
Right.
And suddenly the ANDA started climbing. The FDA was short-staffed. They didn't have the budgets. So they started using generic user fees. So the generics company started paying fees. They used that, they hired people, they trained them, and 5 years later, the generic approval rate starts to pick up.
Right.
So even in the US that happens like that. But how can you expect the Indian government to move faster?
Right. Right.
Maybe they can, but as of now they're not.
Yeah. All right. Okay. Well, of course, the other event or events that we're looking at is the state elections. I suppose UP, Uttarakhand, Punjab will be most critical in this case. Have you worked out any outcomes on, for the incumbents, and perhaps any impact on political stability and consequential impact on the markets?
One, I don't think these things, people like to discuss, right? We all like to gossip, I think.
Right.
So all the political discussion I've seen is generally in the nature of gossip.
Right.
They've lost Bihar, this will change, that will change. What change, right? So I think UP elections from the market perspective, of course, I mean, as a individual, as a Bihari, I mean, I'm very tempted to discuss politics all the time. So I passionately follow what is happening.
Yes.
But I don't think it really matters much for the market.
Okay.
And I need to stay informed because the investors want to know. So
Right.
I need to
Right.
stay informed. So that's my professional need to spend time on it. But you see, it's a four-way fight right now. It is expected it to become a three-way fight with the Congress and the SP possibly joining hands. There is a possibility that, in the first past the post system, see, unlike many other economies where, everyone contests and then the top two then have, if no one gets more than 50% of the vote,
Right.
then the top two go and have a fight, right? In India that doesn't happen. So the voter has to think through the first past the post system, right? So they have to, now the issue is that in the last two elections, despite a quadrangular fight, they have given absolute majority, right?
Right.
So what happens is, in a multi-stage election, there are waves. So whether the exit polls results are published or not, I mean, people get a sense of which way, and they all want to vote for the victor, right?
I suppose, yes.
So if in Western UP a certain party, the swing voter swings to them, then the whole state starts to swing towards them. I'm oversimplifying it, but
Right.
those are dynamics which are impossible to predict,
Yes, they are. Yeah.
right? And therefore, I am staying away from any prediction on this election.
Right.
All I can say is that if the BJP does very badly, then there will be a chance of the opposition starting to consolidate, which can make things difficult in Delhi. If the BJP does very well, then the opposition, sort of the wind goes out of their sails, and then possibly in Delhi, policy making becomes a bit easier.
Right.
But those are two extreme things. I don't think that's going to happen. I mean, it will be somewhere in the middle. I suspect there may not be an absolute victor, like more than 200 seats. So let's see. I mean, it'll be an interesting thing to watch.
Right, yeah.
Okay, so you've spoken about two big upcoming events, of course. I'm going to go back and I want to talk about demonetization, of course. I just want to understand what is your early assessment of the impact of demonetization, given that we at least have some more solid data coming out, whether it is your December auto sales numbers, you had your December CPI, November IP numbers, even earnings. It's too early. Probably IndusInd Bank is the only one that we can actually talk about. But some experts are of the opinion that the recovery can be sooner than expected. Of course, it doesn't seem like you hold that view because you're expecting 2017 to be very rocky.
Yes. So okay. Okay. See, India's economy is actually very complex, right? So I don't claim to know it at all, and I'm envious of people who can predict based on monthly data. So we have been advising investors that you look through this period of volatility. See, it's like, the patient's been put on the operating table, you put anesthesia in, and then you first start claiming, oh my God, the patient is not talking. Well, let the anesthesia wear out, the patient will start talking.
Right.
The question is, once the operation is done, right, so once the currency situation is normalized, what is it that we are going to see? Is the economy going to be back to as it was on 8th of November or not? That is a call that I can't take right now, because see, the data is very distorted, right? So as we discussed on the service tax side, a lot of laundering seems to happen through service tax.
Right.
There was perhaps some distortion in cement sales. December cement sales were very bad, but possibly because November sales were okay. Car sales were very good in December, but that is possibly because November sales were pretty bad. Some microfinance companies saw a very substantial recovery in recovery rates, but then they've stalled at 91%. They're not, in 1 month, they've not moved beyond that.
Right.
So if they stop at 91, it's terrible, right? Because a large part of the book will have to be written down. So I think it is too early to take this call, and I would rather look beyond. So I think that, and some of the recovery has already started.
Okay.
So we are seeing factories are restarting. Some of the reverse migration, we are hearing workers are starting to come back. In the perishable supply chain, in say chicken, milk, vegetables, and hosiery, stainless steel utensils, all the cash-based supply chains. End demand is not a question, and people are not going to stop using stainless steel utensils or stop eating chicken, right?
Right.
So the point is that there's bound to be recovery. Now, what is the lasting implication of this, right? The lasting implications will come through the real estate market, where things are still abysmally low. Right? So all the anecdotes and all the data points are suggesting that registration rates have come down. People, and what you call a classic buyer strike, people expect prices to come down and they're not progressing right now. So if prices fall, there is a negative wealth effect. If people don't buy, and there's a lot of black money used to get parked in real estate, even if someone is able to regenerate, which I think is going to be a problem for the next year. Suppose they've solved that problem, they're able to get their bribes, and they're not going to put a hit me sign on their head and say, let me buy some real estate now.
Right.
They know the government is scrutinizing that. It's like conspicuous consumption. So real estate demand in terms of volumes is going to be slow in the coming year. That's terrible, because that means there is low construction. Who's going to build houses if there's no demand, right? That's bad for cement, that's bad for steel, that's bad for construction labor, downstream home improvement. If prices fall, that's bad for wealth effect, consumer discretionary, and that's 13% of GDP. Right? So that's what I'm worried about. So I haven't heard any anecdote which tells me that, oh, real estate is starting to boom again, right? No, that's not happening. Banking system. See, in this period of uncertainty, where you have significant global uncertainty, we don't know what Mr. Trump is going to do,
right,
or his cabinet. Many of his cabinet appointees or nominees seem to be committing to things which he's supported, or which is opposed.
Yeah.
Right? So we don't really know what this government is going to do, right? Brexit is going to get triggered. We don't know what's going to happen to the Chinese stimulus post the re-elections, the 19th plenary. So there's a tremendous global uncertainty. We don't know what the real impact of demonetization is. We don't know what's going to happen when GST starts, right? We don't even know what rates of GST are going to be for my sector, or whatever, my suppliers, my customers. Why would I invest? Now, if that is the case, where is loan growth going to come from? So if you are the banking system, and banking system is a very large part of the market and of the economy, if you don't see loan growth, and here the largest competitor in the market is taking the battle on pricing, because they clearly realize that there's not going to be any loan growth in the coming year. It's already quite bad. It's going to get worse perhaps. And you can only compete in the retail market on price, because you cannot compete on service, because the private sector banks are doing much better there.
Right.
Now this is a race to the bottom. So your margins are getting squeezed. Your loan growth is weak. Your asset quality problems are not really behind you. I mean, you recognize many of them, but you have not provisioned for them adequately. A weak banking system, a weak real estate market, and the unorganized to organized transition that people are talking about, and which I think is likely to happen, will not be without pain. because the guys whose supply chains get shut down are going to take a few quarters to find new jobs.
Right.
So this is an important transition. I compare it to, and one of my op-eds that I compare it to the refurbishment of a house.
Yes. Yes.
Right. So you break down. So you don't like the background. So backdrop. So you sort of kick it down. Now
Right.
it takes 3-4 months.
Right.
And while it is getting done, you're unsure whether the new thing, the contractor is really going to deliver what he's promised.
Right.
If you're in the market, now I can tell you that this is all very great in the medium term, and I do think it's very great, right? On a 12-18 month perspective, 18-21 month perspective, this is going to be great because tax to GDP goes up, more formalization, better competitiveness, better access to credit, more data to work with. But who's going to tell that to the investor that, look, have patience? And that is why it will be turbulent for the market. So I'm not really focused too much on how soon the revival happens, because it is bound to happen. If currency doesn't normalize in January, it will normalize in February,
Right.
and things will come back. The question is what happens on a 12-month basis, and that's where the concerns are.
Right.
So you would rather wait and watch for this entire operation to get done and then probably take your call.
Yes.
All right. You were just talking about the banking system, so I just want to understand how you think this entire stress loan situation will pan out in 2017. There have been talks of a bad bank at multiple instances. Your thoughts on the entire bad loan resolution process?
Which is not easy, right? So the bad bank has been discussed for almost 2 years now,
Yes.
right? And we haven't seen the government make much progress on it, maybe deliberately, out of choice. I think the problem was much bigger a year back, in the sense that the size of the problem kept growing, right? So a steel company, let's not name them, which in my view, if the banks had taken the scalpel to it, they would have lost 3,000 crores.
Right.
If they had took the scalpel to it in 2016, say by March, April, they would have lost 25,000 crores, right? Now, and they kept lending to renew loans.
Yeah.
I almost had a hallucinatory conversation with the CFO in 2014,
Right.
where I said, I think there is a problem with your cash flows. How will you pay interest? And he said, no, you get loans to pay interest. And I'm sort of stunned and believing that I don't know how my economy operates. Right? So those things have stopped.
Yeah.
So
Right.
with the AQR and the recognition of bad loans, at least the size of the problem has stopped growing. So my sense is, while I do think that some resolution is important, because there's a lot of capital stuck here, there's a lot of banking system attention which is diverted to handling these issues on a daily basis. A lot of the large corporates are also stuck, right? So they're unable to do capex because they're still resolving some old issues and they're stuck with them. So you need to have some resolution. But I think the problem is that any resolution will require taking some more political risk. Because you can't solve this problem without making a judgment call on letting promoters retain control. If you force them to lose control, then there is a bigger problem. So then you'll suddenly be criticized for, oh my God, see, all of these steel plants and power plants are being run by bankers who don't know how to do it.
Right.
And oh, my power plant shutting down. So crazy things can happen. What is the risk? At least, whether you believe it or not, nominal GDP growth is in double digits. And once this thing is done and the cash normalizes, the economy will most likely will not feel as pained and turbulent. Why would you want to do it? So I think the political risk is perhaps too high. And while as an analyst I may think it is important that someone take that risk and sort of do it for the sake of the economy, but I think it is just too uncertain as to, and who's going to resolve it? Do we know? Do we have a set of people like in the developed world where you put a steel asset for grabs, for auction, and some professionals raise capital and then come and take over control? Do we have them? We don't, right? And so you can't really auction these bad assets. So you have to let them retain control, and there's a huge moral hazard there. So why would the government want to dirty its hands?
Right.
In terms of systemic risk that has been emerging, that so the fear can be that if you don't do this, some of the banks will fail, and that creates a systemic risk and run on the banks and all of that. Because these are all PSU banks anyway.
Right.
Yeah.
Right.
Some of them have been reporting huge losses anyway. No one is afraid putting deposits in there, right? So in a way, this is already nationalized.
Right.
So it's a giant bad bank. It's just that it's an inefficiently giant bad bank in the sense that there are too many entities, and therefore resolution of the problem is actually much more dragged down and protracted.
Right.
But from a systemic risk perspective, I don't think it's that high. So therefore, I don't know what the government is thinking, but my sense is that there will not be too much active stuff on this.
All right. Okay, so for my final question, I'm sure we've covered a lot of this, but I'm going to quote you. Mr. Mishra says that one of the important trends over the past 5 years has been the steady outperformance of broader indices over the narrower indices. This was mainly because the narrow indices have more global exposure, and the next 400, that is, if you remove the stocks of the BSE 100 stocks from the BSE 500 stocks, then, well, the driving outperformance of those 400 are mostly about India-focused stories. Am I correct? I hope I'm
Correct, absolutely.
So, and you are expecting a reversal of this in the next 12 months. So, can you tell us?
Yeah, so that is what, so when you asked earlier on, how do you position your portfolio? What are your big top-down choices? The first preference is, of course, you have to then fine-tune it, but first preference is stay away from India discretionary or India cyclically focused industries, because if there is likely to be some growth disappointment, whether it appears in GDP and IIP numbers or not, it will definitely appear in company growth numbers and commentary, and therefore I would avoid. And now, almost as a corollary of that, it appears, I would say that the 3-year outperformance of the next 400 is something that we will see reverse this year.
Right.
So in the prior 3 years, we had seen the narrower indices underperform the broader indices. So if you put rank them, BSE 500 did the best. Actually, the next 400 did the best, and the BSE 500, then the BSE 200, BSE 100, Nifty, and then Sensex.
Right.
It was very nicely, and I think the reverse starts to happen this year.
Right. Well, Mr. Mishra, thank you for joining us.
No, pleasure having me
It
here.
was a pleasure speaking with you. As for you guys, thank you for joining us with Bloomberg Quint, and we will see you next week on Thank God It's Friday.